Hey there, it's Krishna, and today I want to discuss with you 9 key terms that you need to know before purchasing a home. The first key term is appraisals, and appraisals are basically estimated values that are done by a licensed third party, namely an appraiser. And these appraisals are important because lenders rely on them to give them a value estimate of the home um, that in turn allows them to decide how much they're going to lend you. So they don't want to lend you more than the house is worth, so they go turn to the appraiser to give them these value estimate reports. The next key term is closing costs. Don't confuse this with down payment. Closing costs is completely separate. Closing costs can range from things that you pay for, outside of closing and through the closing. It could be discount points, taxes, title insurance, the appraisal, inspections. It can include surveys. So anything in conjunction with the purchase of the home can be classified as closing costs. So again, get an estimate from your lender and they can tell you what the typical closing costs are for that area. The next key term is credit score. Credit score is basically a number range from 300 all the way up to 850. If you don't have credit, then it'll have a no credit. You won't have a credit score, but the higher the better on that credit range. The higher it is, the easier typically is to process a loan. You get a lot of automated responses, yeses. Otherwise, if it's below, say, 600 or 640, then they have to do a manual underwrite. So actual person has to do all the work, and it takes a lot longer that way, but they have to make sure that they are lending to someone that is qualified when it is a manual underwrite. So make sure you understand what the credit score requirements are for your lender and your loan product, and how that's going to impact your rate. The next key term is down payment. This is the equity payment that you're actually paying at closing. Down payments can range anywhere from 3.5% to 20% down if you're required to bring a down payment. It is tied to the purchase price of the home. So that those percentages are tied to the purchase price of the home. There are some zero down payment programs that are available. Some require you to be a first-time home buyer, meaning you haven't owned a home in the past 3 years. Others do not have a first-time home buyer requirement. They're actually geared towards that are veterans, that are folks that are have been in the military, have service. So that's a VA loan. That's a zero down type of a loan. There are other loans as well for other folks that are not veterans that are zero down payment loans. Those typically come with some sort of income cap for using them. But again, they are available, and they also may have a higher interest rate. So keep that in mind if you're using a zero down program. You're going to have a higher interest rate typically, with the exception of VA loans. The next key term is mortgage rate. This is your actual rate that you're paying for the money that you're borrowing from the lender, and that interest rate will continue to fluctuate until you lock in the rate. And you can't typically lock that rate in until you have a contract on a house and you have told your lender, okay, I'm ready to lock in my rate. So if you are shopping for a home or shopping for a lender, just understand whatever people tell you, whatever great rate they say, yeah, I can get you this rate or that rate. Well, they can get you that rate that day, at that time. But typically home buyers are going to shop for a few weeks and all of a sudden the rates are going to change, and then you're going to go lock it in, and it's not going to be the same rate that you discussed before, because rates are a market rate. So keep that in mind as you're shopping for homes. The next key term is pre-approval letter. This is a in my mind, this is a must. And this letter basically details your readiness to buy. What items have you turned into your lender? Have you done a written application? What is your, what kind of loan are you using? What is the interest rate that you're getting? So the more detailed the lender letter, the stronger that lender letter looks, and comes highly recommended, by the agents presenting the offers. The next key term is inspection contingency. We call that an option period around here, but inspection contingency basically gives you a time period to inspect the property, make sure that everything's working correctly, and if you need to go back and renegotiate with the seller, you would want to do it during that time. Not everyone these days is doing these, but it's highly recommend that you do keep a option period or inspection contingency in your contract. That way you don't have buyer's remorse later on when something really expensive comes up that you didn't catch before. The next key term is affordability. This is simply a measure that the lender uses to determine how much house you can afford, and they use the interest rate that you're qualified for, the price of the home, and they measure that to see what how affordable the home is for you. So if you are if you're way under your affordability amount, then that's really good. So you're not pressing things. So you want to stay as affordable as possible. But that's all it is the measure of whether you can afford the house or not, and how that measure looks with the price. The last key term here is equity. The equity, this is a value in your home that is measured against the loan amount that you have on the home. So if you buy a house for $200,000 and the home appreciates up to $205,000 in a couple of months, you have about $5,000 equity. So that is what we're seeing right now. We're seeing massive equity in the markets. People are getting a lot of value from the homes these days, and that does fluctuate. But the bottom line is you want to have as much equity as possible, as quickly as possible when owning a home. So I hope those terms helped you out in some way. If you still have questions or you're looking to make a move, let's get in contact. You can reach me 210-260-6617. And if you like this video, make sure you give it a thumbs up, and I'll see you on the next video.